Figma got screwed by their IPO. Their stock more than tripled on their first day of trading, and that's not supposed to happen. Now, the stock has cooled off a bit since, but Figma still left a lot of money on the table. And now there's some people calling out the IPO process and saying that it's rigged against retail investors. So let me try to break it all down. See, when companies file for an IPO, they hire an investment banker to underwrite it. It's the investment banker's job to figure out what to price the IPO at and to find investors at that price. In Figma's case, their investment bankers thought that Figma should be valued at $33 a share, giving the company a $20 billion market cap. So on the day of their IPO, Figma sold 37 million shares at $33 a share, raising $1.2 billion in the process. But that was totally mispriced because the stock more than tripled on its first day of trading, meaning they could have IPO'd at a higher price. And this is where the IPO process gets a little unfair. The people that are given the option to buy in at the IPO price of $33 in this case are usually rich investors or hedge funds that have relationships with the investment banks working on the IPO. Retail investors like me and you don't get to buy until the stock starts trading. And by then, the stock has usually popped, like we saw with Figma, like we saw with Circle, and many more. So all the rich clients and the institutional investors are the ones that benefit from the upside on the IPO. And the biggest loser of this whole thing isn't even retail investors, it's actually Figma themselves. If they had IPO'd at, say, $75 instead of $33, the company would have raised an extra $1.5 billion in the process. So they left a lot of money on the table. And the funny thing is, the investment bankers themselves also left money on the table because their fee is a percentage of the IPO price. So they could have made double or triple the fee. But yeah, I'm sure their clients are very happy that they've tripled their money overnight, and I'm sure that's going to pay off for the investment bank down the line. So yeah, that's an example of how the current IPO process benefits rich people and hedge funds and institutional investors. And that's why there's some people like venture capitalist Bill Gurley who has been criticizing the IPO process for years now. He posted another epic rant after Figma IPO'd last week. Now, to defend the investment bankers for a bit, they're going to make the case that they don't want to be too aggressive when it comes to pricing the IPO because the last thing they want is for the stock to drop on its debut. This famously happened with Facebook when they IPO'd back in 2012, and Morgan Stanley took a lot of heat for it. So it's just less risky for investment bankers to underprice their IPO. In fact, whenever a stock pops on its first day of trading, that creates more buzz and attention around the company. And again, the clients of the investment bankers that got in early at the IPO love that as well. So I don't know if we're going to see the IPO process change. And with Figma, I mean, who knows? Maybe we're all overreacting and the stock ends up in the $30 to $40 range in a few weeks anyways.